everyone, this is Mish, Chief Strategist of MarketGauge.com. And so far, we're starting this week, interestingly, coming off of an incredible short week of new highs in the market. The PCE, which of course came out Friday, showing inflation was lower in certain pockets. And yet, we're also seeing gold continue to rocket to new highs. And some of the indices, as we're starting this week and the second quarter, are actually turned to red, as one of my key barometers, junk bonds, is actually down a lot and testing some major support. But meanwhile, what I want to talk to you today about is really 4 instruments that could be very interesting. One would be GDX. Now, we've talked about GDX before. It's the gold miners. And even though gold has been rallying more as a flight to safety, and many could think even with yields going up and the dollar strong, why is gold rallying? That must mean some trouble. Is the trouble going to be some kind of major credit event? Or is the trouble going to be, regardless of what's going on and what the numbers are saying inflation-wise, that we're going to see higher inflation? Because let's face it, we do have reasons that we can go through for that to happen. So GDX is key, because what GDX does is it typically leads the gold market in an inflationary environment. And GDX literally has gone up about $5 over the last couple of weeks. What's amazing to me is if we look at the calendar range, so that on the chart you'll see is a horizontal green line. That is set in January, and it's finally taking it out at 31.25. However, I don't have a weekly chart to show you right now. You're looking at a daily chart, but if you looked at a weekly chart, you would see that the 200-week moving average, which it hasn't been above in quite some time, is exactly where it stopped today at around 32.25. So we now have a new battle price-wise to look at. If it holds 31.25, that's probably a positive. But if it can't clear 32.25, doesn't mean that the move is over. It just means that it will need some other reason to push through. And of course, that could be the very reason why the markets are getting spooked vis-a-vis the junk bonds. So that's number one. Number 2 is retail. So XRT is my go-to. That's my grandma, my economic modern family. If you don't know about the economic modern family, you can find out more on our website at Market Gauge. But XRT, in terms of our quant models, last week triggered a buy in our sector moderate model, which means that it's gone up in ranking and looking pretty good. It's made a big move. Why is that important? Because it has a nice combination of staples and discretionary spending stocks. And the consumer in the PCE numbers showing that they're spending more than they're making. If that keeps up, you will see that reflected, and that will continue to drag the market up. I guess we can call it revenge spending in a way. But if XRT can't maintain these gains, that would be another really important area to look at. So if we put some numbers on it, it has to get through 80, and it has to hold 75 support. Next, I want to talk to you a little bit about, just because it is probably in terms of companies a phenomenon that I find fascinating, and this is by no means a political statement, just an idea of how a company, like what we just saw with the launch of DJT last week, can go from a company that with $4 million in revenues lost $58 million last year in 2023, and yet with the launch of it and the IPO last week, after it being a SPAC, it gained like 60%. So basically a worthless company, or a company that's in huge debt, that based everything on advertising revenue, climbed, making Trump, who's a 55% owner of the company, back to one of the top richest guys, 500 richest, I shouldn't say guys, but people in the U.S. So essentially what I'm saying is, this is a fascinating stock to watch. If you just are interested in how things can get manipulated, number one, if you want to see how advertisers may or may not want to continue with Trump, depending on what he says, and if you want to see the popularity as we're in an election year, just watch that stock. It really had a major breakout over 50, as you can see in the chart, but it couldn't get through 80. That was the highest price last week. So we're going to continue to watch that chop around, just really more for a technical fascination than anything else. And finally, let's talk about Netflix. So Netflix, I'd written an article a couple of weeks ago about how I felt that if the market turned down in terms of the big guns, that Netflix might be one of the first ones. And indeed, it went from 630 all the way down to about 600. And now as we're starting this week, it's trading at about 608. So a pop after a big move down like that is not really unusual or unexpected. The key is what's going to happen from here. Now, we do have a Fab 4 now, not so much a Magnificent 7, and Netflix is not on that list. But nonetheless, one has to wonder, is $630 pricey for a company that A, has a lot of competition, and B, in terms of content, hasn't really put out anything all that new in a long time. Anything at least that's new, that's a major hit. Although they're coming out with the Bridgerton 3 season, we'll see if that does anything for the viewership. Nonetheless, on the chart, if it breaks down under 600, there's a stock that I think might be a good short opportunity if you're not already sure. Looking for maybe 550, maybe down to 500. We'll keep an eye on that. And obviously, if it gets to 630, never mind. That would be my risk point. But at this point, I hardly doubt it. So really, to sum up, it's an interesting market. We have pockets doing well. We have pockets that are starting to look possibly toppy. And we have an inflation narrative that still hasn't fully resolved vis-a-vis the miners, which are up, but not necessarily enough for us to get concerned that we'll start to see it trickle into not just other commodities, but also will the dollar potentially go down, and will it also spook the equities market? Okay, thank you so much for watching. You all have a great day. Happy trading, and bye for now.